Wow, 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 wow. What's up, everybody? I'm Will Brown, CTA, Chief Technical Analyst at Quantum Capital Research Group. I'm right here once again to continue to show you how our members are winning, benefiting, and most importantly, profiting from the work we're doing right here at Quantum Capital Research Group. On July 2nd, we posted in the members dashboard, which is right behind me. Members only. I didn't put it on social media, but here's a screenshot of the order field for proof. July 2nd, we put on a trade, ticker symbol MARA. It was an options play. We ended up snapping up contracts at $1.40 per contract. On Friday last week, July 11th, we ended up selling those contracts at $2.38 per contract for a 70% return on investment. To put that in perspective, if you would have put $5,000 into that trade, if you're a member and you got the alert, you would have earned $3,500 within 1 week's time. Who can't benefit from $3,500? Even if you take $1,000 out, pay bills, save, pay down debt, right? You can still put the rest back into your trading account, or keep the rest in your trading account and put the rest back in the market to compound those earnings. And that's what we do. That's what this is about. It's to create supplemental income for yourself so you don't have to continue to work as hard, and you can put your hard-earned money back to work. So if you are a busy working professional like most of us are, and you want to compound your earnings, and you want to do that through the stock market, and you want to participate, head over to quantumcapitalresearch.com. We provide done-for-you technical analysis, stock screening, trade planning, trade management that will enable you to create consistent and reliable returns in the stock market just like this. Every week, we post 5 high probability stock picks just like this for you to earn those consistent and reliable returns. So this is going to be a longer video. That was the introduction. This is going to be a longer video for those of you watching on Instagram. I'm going to put a link in the comment section so you can click back to YouTube and continue to watch. There are some things in here I'm going to unpack that will be impactful and beneficial for you to watch. For those of you watching on YouTube, please continue to watch. I'm going to give you some market insight. For those of you that are current members, we're going to break down some things that are impacting our trades currently. And then I'm going to give some trading psychology and trading advice as well. So market outlook. For those of you that have been following the market, on Friday, the market sold off, dropped down a little bit, 200 points, and that was due to the tariff announcement that Trump made. It's going to slap 30% or 35% tariffs on the EU. So the market sold off. To be expected, nothing crazy. I believe going into Monday and the trading week, we're going to reach a little bit of chop until all that stuff is kind of worked out. But once again, that's fine. What I want you guys to pay attention to, though, is for those of you that are novice traders or intermediate traders, this is a little bit of trading psychology I want to go into. Don't follow the crowd, right? If the market sells off like it did, don't follow the crowd, because the crowd can actually lead you in the wrong direction. What you want to do is continue to rely on technical analysis, things that we provide, because technical analysis gives you insight on how your trades are doing, because this is really a trade by trade basis. So for example, if you're in a trade specifically and the market sells off like it did, unless your trades drop off significantly or they drop below market structure, stay in those trades, because more likely they're still good trades. So if they can hold up to a stress test like that, that's a good sign, because when it dropped down, it may have dipped down to a new low or a higher low, which means it's going to push back up to a higher high. So you're still in a good trade. So don't follow the crowd in panic sale like everybody else does. Use technical analysis to direct and guide your trades. That's one thing. I'm looking down because I have notes. Some things I want to go over. Another thing I also want to mention is, for us at Quantum Capital Research Group, most importantly, we love when the market sells off like the way it did, especially over news like that, very minor news, something that, after a couple of days ends up shaking out. We love it, because what ends up happening is a lot more trading opportunities end up opening up for us. So when we sit down and we do our stock screening, we look for trades that actually fail to support. So give you an example right here on the screen. This is ticker symbol BYRN. And once again, this is going to be a freebie I will give you guys out of our Quantum Capital Research Group book of plays. However, I have the screen right here. What I like about this trade specifically is, as you can see, the price action dropped down here to this level of support, and it's still on a new low. So that's a good sign as well, still trending upward. But what's great about it is, you know, the only reason why it really sold off, most importantly, is because the tariffs. This tariff news created some volatility and people panic sold, because if you actually bought at the, if you were in this trade from the low to this high, you're taking profits. So once again, that's to be expected. Another reason that may have impacted the sell-off of this trade was, I think on Wednesday, last Wednesday, they ended up making a announcement for earnings. They had their earnings call, and they actually ended up beating earnings. And you'll see stuff like this happen too, where a stock will beat earnings and it still drops for whatever reason. But once again, if you look at, you know, from the low to the high, this is actually profit taking place. So what this means is there's more supply that has opened up, and it creates a buying opportunity for us. So for the freebie there, once again, we like this because it puts us in a position to where this is what I would call a high probability, low risk trade. This is it right here, folks. This is the definition of it, right? So what we're looking to do, we're going to go long on this position. We're going to enter at $22.27. We're going to put a stop in the market at $20.44, and we're going to look to take profits at $32.96. If this trade doesn't work, we're only going to risk $8.22. As you can see, we're going to set our stop a distance below market structure, which is only 8% loss. If it ends up working out, we're going to reach back up to that high, which gives us a 48.27% return. These are the types of trades we're looking for. If you can earn 2.5 plus your risk, then you're in a profitable position. This is the very definition of what a high probability setup is. We have a high probability setup and a high probability trade because we have a very high probability that this will swing up to the upside, and we have a very low risk tolerance here if the price action drops below market structure where we plan on setting our stop. So pay attention to this trade. If the price action ends up moving the direction that I anticipate, and if you're on the sidelines and you're not yet a member of Quantum Capital Research Group, head over to our website, quantumcapitalresearch.com. Take advantage of our 14-day free trial, because these are the types of high probability stocks we put on every week. 5 of them every week for our members to benefit. So once again, if you don't have time to do the stock screening, the research, the trade planning, the trade management, because you just don't have the bandwidth, that's what we do. So you just put on the trades that we provide for you in the members dashboard within any platform of your choice. Robinhood, Thinkorswim, Interactive Brokers, E-Trade will help onboard you so you can understand what it is that we're doing, because it's important for you to understand so you can know how you're benefiting from the work that we're doing. Another thing I want to mention, this will be my last point, is it's very important to have a measurement of success with what you're doing. And it's good to have a metric. So what I ended up doing, here's a screenshot of what we call a gains keeper. This is a gains analyzer right here. So as you can see, we have a, a win rate of 33%. I'm sorry, a win percentage of 33% and a loss percentage of 9%. What does this mean? This means that we have very good risk management, right? So what I want you to understand is a loss is nothing but the cost of doing business. I read somebody's post where they said, you know, if you take a loss, learn how not to lose again. No, you're going to lose. A loss is just a part of doing business, right? If you find an edge in the market like we provide, and you put on that edge and you take a loss, it's really nothing that you did. So there's nothing to benefit from. There's nothing to learn from if you take that loss. So I saw that post, I said, that's actually full of shit, because it doesn't matter. You can't necessarily learn from that loss if you did everything right to begin with. So The loss is nothing but the cost of doing business. So what this means is this: we're in a ratio that is well above what people would expect. So like I said, if you earn 2.5 times your money, 2.5 times what you risk, you're always going to get ahead, right? This is one of those scenarios where you take 3 steps forward and 1 step back. 3 steps forward and 1 step back. Because technically with this ratio right now, we're at 3.5 times of our risk. So pay attention to stuff like this. This is very important. It's good to have a metric so you understand how well you're doing. And this is a very good success metric to follow, right? This just means that our cost of doing business right now is just costing us 9%. So if you're, I just want to put this out there for those of you that are trading, follow your gamekeepers. Use this as a tool to grow from that, right? You can always tweak your methodology for better returns. But like I said, as long as you're doing your technical analysis, the edge shows up and you put on the trade properly, if you take a loss, there's nothing that you did. You can't control the tape, you can't control the market. I just want to put that out there. That's some trading psychology. Once again, head over to quantumcapitalresearch.com. If you're a new member, if you're not a member yet, head over, take advantage of our 14-day trial. For our members, we did post 5 new high probability stock picks within the members dashboard, including that BYRN ticker symbol right there as well. So thanks again for watching. I'll check back with you, if not Monday, later in the week.